watch this video to the end if you struggle to know when your POI will hold or completely fail. So you've probably marked the zone that look perfect. Everything checks out. There's a breakout structure, there's the order block, there's a fair value gap also. And boom, price went straight through it. So the question is, how do you know if a zone will hold or break even before it happens? And that's what I'm about to show you using a clean ICT approach, which I also use in my own system, which I call PAC. So let me get into how to confirm if a zone will hold or not. This is a POI here, and we all know that at the POI we are expecting a reversal. Price is actually getting there, and I'm expecting price to sell from that level to go down. So let me show you how to confirm the zones. So right here on the screen, what you can see here is an example of a POI that I am looking at price reaching out to, or let's assume I have something like this. Let's just think that we have maybe a supply zone like this. So with this assumption, we are taking it that price is coming from a supply POI here, and now price is returning back there with the retracement. So I want to know, will this zone hold or price is going to break through that zone? Now, mostly seeing the rejection candle at the POI might not be the only confirmation you need, and that's why I want to show you one of the simplest way I get to confirm if a zone will truly hold or reverse, or even how I can get out of a trade that is about to reverse. So when price starts selling here, it's a very simple thing that we're going to just use a simple tool called fair value gap. Now, a bullish fair value gap looks like this. This is how a bullish fair value gap looks like. Okay, this is a bullish fair value gap over here. So a simple way we get it is, if price starts trading and selling down now, and price gets into this fair value gap we are looking at right here. So let's just take it that price is going down and it gets into this fair value gap. One easy way we can confirm reversal if this particular POI is actually going to hold price to keep on going down, or price might likely break that zone. So let me show you right here. So now look at the fair value gap that we have close to the POI. So the moment price starts reacting at the POI and is going down, look at the immediate fair value gap that is just before that POI. So the simple thing you must look out for here is that if price does not break that fair value gap, I want you guys to hold this hold this information very well, because this information is going to be the difference between you and every other type of trader, especially when it comes to using the concept of fair value gap. We use it for several purposes, and this is one of the most important way you can use it to your own advantage in a unique way. Once price starts selling and it gets into the gap and there's a rejection inside the gap, it's a sign that price is about to break that zone. So what you likely must do is get out of that trade. So even if I take a sell right from those points and I'm anticipating that price should break this zone here, if price fails to break that zone, that's a signal for me to get out. The other one, or the other way now that you can confirm a true reversal, is by a BPR. Okay, we have this as a BPR. When you have price going to a fair value gap, and you can see this is a bullish fair value gap that is just before the POI. The moment price closes below that fair value gap, you understand, that's a sign that the reversal has been confirmed. So if I am holding a sell right from this point here, now I am holding that sell with confidence that the reversal has been confirmed and I can expect price to go down. And apart from that, I can even get another entry with that confirmation that yes, price has broken this fair value gap, and now I'm confident price is going to sell. And that's what we can talk about, maybe using the BPR. Okay, let's assume price has a BPR like this. Let's assume the market create a BPR. Now a BPR is where we have overlapping of fair value gaps. Over here we have a bullish fair value gap, and also here we have a bearish fair value gap. Now look at the moment where these two guys overlap. That point where they overlap is where we use as our BPR, our balanced price mix. So price retracing back into this BPR can give you another opportunity to sell. That's after you have gotten the confirmation you need for the reversal. So when you are trading reversals and you see this happening, then your reversal is confirmed and you can expect price to deliver as you expect. But when you are looking at this and it has happened like that, price rejected, is a sign of possible continuation. Another possibility is when we have inversion fair value gap. So that third one is inversion fair value gap. So with inversion fair value gap, it's quite easy also. What we just get to see is that the market creates a fair value gap like something like this, where we have a wick entering into, the idea here is very simple. The moment price is closing and breaking this fair value gap we have here, the bullish one, just like this one. Now, it doesn't matter if it's breaking that zone with another fair value gap like the one we saw in BPR, or it's just breaking the zone without a fair value gap. It doesn't really matter. Okay, with BPR, we can still use that area, the part of the overlapping fair value gap for another entry. And the same thing can also be used for the inversion fair value gap also. Okay, what you can call inverse fair value gap. So this same fair value gap here can also be used as well to get another entry to the downside with confidence, knowing that the market has given us the signal for the confirmation. But in this other instance here, you should know that the market is not willing to sell or reverse at that point. It's a sign of rejection, and it shows that price wants to continue going higher. So let me show you some real examples on the charts. So let's take a look at this gold sell over here, and we can see a very beautiful supply zone. Price has taken out liquidity, it has broken structure, and we have a nice RTO here. Now, how do I confirm if there will truly be a reversal here or not? Like I said, all I need to do is just to find the recent fair value gap. So look at this. This is a fair value gap here. And on this fair value gap, all I need to do is for price to close below it. That's a confirmation I need. Whenever you see a supply zone and price is leading to that supply and you want to sell from the supply, you expect a reversal from there. Now, of course, we know that there are several methods of confirmation, but this is just one of those methods you can actually add in your arsenal. Over here, price has a fair value gap leading to that point, and the confirmation would be until, can you see this? Price never closed below the fair value gap, and that signifies to me that price still wants to go higher. And this here means, can you see the supply field? So with this over here, with this particular reaction over here, I would have known that price is not willing to reverse and it's still going to lead to a continuation. Now look at this other example here. This is on that supply zone over here too, and it's even almost busting out the supply. But how do I confirm if price want to sell from this supply? One of the things I can do is that I will use the fair value gap. Now this is the gap leading to that point. This is a fair value gap leading to that POI. That's a fair value gap over here. So until price closes below that fair value gap, that's when I can confirm that truly there's going to be a reversal. And let's play. Can you see that? The moment price closes below that fair value gap, that's a sign that yes, a reversal has already happened here. So the fair value gap are very, very vital whenever you are trying to trade your reversals. Very, very vital. Especially when you are trading zones and you are trying to trade reversals. Very, very vital thing that you must apply as an extra confirmation for your reversal. Okay, so can you see this now? This is like a proper, should I say a BPR? Yes, price. But all that matters is as long as price is closing below the recent fair value gap leading to that point, that's a confirmation I need for my reversal. Now I can now use the BPR, the inversion fair value gap as a re-entry. But mostly once I get that confirmation, it signifies to me that yes, price is willing to reverse. So take a look at this quick example also. And this one, market was taking out liquidity. And what do you notice? Immediately price was reading the liquidity. The fair value gap leading to that point was totally engulfed. You can see price closing above the fair value gap. And this is an example we'll call the BPR, right? The point where the fair value gap will actually both overlap. So price traded into the BPR and continued. So once I see all of this happening, price closing above the fair value gap, that's totally confirms the reversal for me. So I can now look for other entries to the upside, or stuff like, for example, look at this. This is a supply zone, right? And imagine me trying to sell from this supply zone. Let's just assume I want to sell from there. Now the confirmation I would be getting is the fair value gap leading to that point. In this case, this is the fair value gap. So assuming price got into this level and traded below this fair value gap, now yes, I can say there's going to be a reversal. But you can see it can help you from even taking some trades. Like you can be able to prevent yourself from getting into some positions, because the market does not even, it does not even given the confirmation. So that's how I use fair value gap, and many other ways I can use it also, but this is exactly how I use it to get confirmation of reversals. And once you understand how they all interact, reversals will stop feeling random. So if you found this very helpful, let me know in the comment section and let me know which of these confirmations pattern do you love the most. And if you are new here, make sure to subscribe because I'll be breaking down how to combine these confirmations into one simple system which I use in the same logic of my everyday trading. So thank you guys, and I'll see you on the next one.